May profits be upon you. Welcome to another weekly market forecast. We're looking at the S&P 500. We're going to take a look at it on the FXCM CFD, the SPX 500. That's what we're going to look at. We're going to chart it there. Okay. We're looking at the monthly time frame. Does anybody have any question as to whether this is a bullish market or a bearish market? We got higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. We're at all-time highs right now. Okay, this is pretty simple. Up, that's all we got. Up, bing, bing. All right. I don't know what that sound effect was all about. Don't worry about that. Okay, we got some headlines on the weekly time frame. The S&P 500 snaps two-week winning streak, drops 2.4% amid Trump's tariff blitz. Weak payrolls and earnings reports barrage. All right. What does that mean? Bad news, bad fundamentals brought the market down. People took their money out of safer assets, riskier assets, and put them into safer assets. So they're not willing to take risk right now. Okay, that's what that basically boils down to. Now, what I want you to see is that we have a strong break of market structure here. This was an old high, an old swing high, and price closed past that swing high, letting you know that there is bullish market order flow right now. Okay, and we reached all-time highs with this candle here. This was the previous week's candle, and this was last week's candle. Man, let me show you how strong this is. All right, this is a bearish engulfer. All right, this is a bearish engulfing pattern. It's a pretty strong indication that the market is heading downwards, but it not only closed past the low of the previous week, closed past the week prior to that and the week prior to that. It closed past all of those weeks. That is a strong market indicator that, hey, we're probably heading down. And where are we heading down to? That's where I want to get to. Take note, we are at there's a bullish fair value gap here. This is what I like. We got a bullish fair value gap here. As price broke this high, it closed above. All right, it closed above, which indicates that there is intentional energy to move higher in the markets. Okay, that's the way I interpret that. And we also have, you see this bearish candle here, bearish candle here. We have the sell before the stronger buy, and it displaced up through this high as well as this one. And this is an intermediate high, but it is a swing high nonetheless, an intermediate one, and it slices through, just like this one intersects this weekly fair value gap, which is like a confluence. All right, it adds to the dependability of this fair value gap to hold price, but once it comes back through it, find support and send price upwards. Okay, it raises the probabilities that that market will hold. That fair value gap will hold. I'm sorry. So we're going to the daily, and what do we have on the daily? The daily, you can see a high, the swing high being broken. You can see the swing high here, the intermediate swing high here, going through that weekly fair value gap. But what I want you to see in that weekly fair value gap is that there's a bullish fair value gap here, there's a bullish fair value gap here, there's another bullish fair value gap there. That's telling you that this is a pretty strong area for buyers. All right, if price comes back down here, we're probably going to find some buyers that are going to bring price back up. All right, and I want you to see that where this bullish fair value gap, this daily bullish fair value gap is, it's nested within the weekly fair value gap. All right, which is nested within a monthly fair value gap. All right, it's pretty strong. I'm going to say high probability trade waiting here for buys. Okay, and I want you to see that these two candles are pretty strong coming down. And this one leaves a lot of room for another fair value gap to be formed, so that price could wick up, form the candle, all right, form that candle, and then the next candle takes that high. It'll be a two candle touch. Take that high off of the previous candle, and reach down into the fair value gap. So that's the dynamic I am looking for. We have a draw of liquidity, a draw on liquidity right here in the form of these relative equal lows right above the fair value gap. Okay, all right. If I'm going to pick a number, I'll be saying this. Watch this. Watch what I'm doing here. All right, I'm going to take a Fibonacci retracement tool from the low to the high. Swing it over here so I can see the numbers, and let's put it at Fibonacci, right? And what we can see is right here's the 50% of this trading range from the high to the low. All right, this is your premium, this is your discount. Premium prices, you want to take your shorts from there. Discount prices, you want to take your longs. Those are the best areas to take those trades. All right, and in order to take buys, we got to wait until price comes down past the 50% into the golden ratio. The golden ratio is the 618, and it is aligned with this daily fair value gap. You see that coming right across there? Yeah. So I'm definitely got my eye on this area, which is located at 6135. Once price gets past the 50% of this trading range, which is called the equilibrium, once price gets past the EQ, once price gets past this EQ, so maybe forms a fair value gap. I would definitely like to see it hit that fair value gap before coming down. That would let me keep my eye on this level between 6174.50 and 61112. 6112. All right. 618. This is where the 618 Fibonacci is. So this is the area I definitely will be looking for a high probability to the upside. And what am I looking for? I'm looking for price to come down and touch into here. And this is our POI, and I'm waiting for a price to make contact once it gets past the 50%. And I'll go down to the hour chart for the narrative. All right, to look at price up close, and I'm looking forward to do what? Make a low, a lower low, a lower high, a lower low, and then a higher high. This is when I'm looking for price to come back, and I'll take that high probability trade to the upside. All right, so we go over that one more time. I'm looking for a low, a lower high, a lower low, a higher high. That is our signal to come back into that breaker. All right, this will be a breaker here, and wait for price to push up higher. And it's at this point for that high probability trade, I go down to the 5 or 1 minute for my execution time frame. That's what I'm going to do. That's my plan. Anyway, I hope that you get what I'm. Are you picking up what I'm putting down? All right. I hope you dig it, man. Make sure you hit the like button. Make sure you hit the boost button. Leave a comment. I respond to each and every comment that comes into my my comment section, and I will see you in the next video. The next video is going to be the NASDAQ 100. You want to make sure you check that. All right, check it. I'll give you the links for the other videos I already put out this morning. All right, see you in the next video.